I'm Jessica Minton for IB Times TV, reporting from the New York Stock Exchange, where stocks rallied on expectations for further stimulus measures from the Federal Reserve. Chinese and Eurozone economic data released this week suggested a slowdown in global economic growth, while data coming out of the U.S. suggested improvements in the housing and labor markets. Ben Willis and Kenneth Polcari will be speaking with us about the latest economic data released this week and its potential impact on the global markets. New single-family home prices rose in July, but prices fell, giving mixed signals about the strength of the country's housing market recovery. On Tuesday, the Federal Housing Finance Agency announced the new standards intended to streamline short sale qualification and processing for loans owned or guaranteed by Fannie Mae or Freddie Mac. The rules are set to go into effect on November 1st, 2012, and allow servicers to more efficiently process a short sale for borrowers with hardships, including those presently current on their loans. Data released yesterday showed that sales of new single-family homes rose in July. Do you think the Federal Reserve can use this as evidence that they aren't going to announce another round of quantitative easing?
Well, I guess backing into it, yes, I think it ties their hands, even though today we had commentary from a letter that Ben Bernanke wrote to Congress suggesting they're still looking at quantitative easing, but when you continue to get numbers like that, the durable good orders today, it makes it very difficult to justify unless he's trying to justify keeping his job.
The Federal Finance Housing Agency announced new guidelines to streamline short sale qualifications for loans that are owned or guaranteed by Fannie Mae and Freddie Mac. Will this be a positive for the housing market, or could there be losses in the short term?
Well, the short sales traditionally are homes that have already been in foreclosure or loan default of some sort. So the losses should have been taken already if they're properly booked by whoever is carrying those loans, in this case Fannie or Freddie. So I don't think you shouldn't see any significant change if they've been booking the losses properly. The fact of the matter is this is just a faster way to clear it, and rather than have Fannie or Freddie take possession in a foreclosure, this allows the homeowner to sell it, but the losses are absorbed then by the loan holder, the mortgage like Fannie Mae or Freddie Mac. But those losses should already be known.
China's factories contracted in August, the most in 9 months, according to a survey showing falling export orders and rising inventories. U.S. manufacturing activity improved slightly in August, but weekly jobless claims were unexpectedly higher last week, keeping alive expectations for monetary easing at the Federal Reserve's September meeting. China's manufacturing PMI fell to its lowest since November. How will Europe, which is now going into its second recession within the last 3 years, affect China, which counts Europe as its biggest export market?
I think that's a big problem, right? Because like you just said, it is their biggest export market. And so in the event that China does roll off the edge, it's going to drag not only Europe down, but really the global economy because it's so interconnected. I would, though, be cautious to say, listen, China's growing at a fairly still rapid pace considering what the rest of the world is growing at, right? So they're slowing down from a really rapid pace, China, but by no means do I really think that China's going to fall off the edge. Yeah, the numbers look bad, but don't forget, China's a big country, and they've got real money in order to do shovel-ready projects to get their economy going again. So quite honestly, I think we've probably seen the worst of China, and I think that economy will start to turn around. The one I think we all have to worry about is really more the European economy. If they go off the edge and they're not able to participate anywhere, whether it's in exporting to China, whether it's coming into the States, what their situation is going to be in terms of the euro, are countries leaving, are they staying? And so I think that's clearly the much bigger problem. But the truth is, I think although China appears as if it's slowing down, and it is compared to what it was, I think probably the worst of that is over, and we'll start to see China stabilize and move ahead.
By contrast, U.S. manufacturing slightly rose in August. How will reduced demand in Europe affect U.S. manufacturing?
You know, that's an interesting question. Certainly it's going to affect it to some extent, right? Just because Europe is a big trading partner, as is Asia is a big trading partner. But my sense is that again, I think the worst is over everywhere. I think the big outlier there in Europe is certainly just the whole union and whether or not they're able to save those countries, right? So if they're unable to, then I think it's a whole different ball game. If in fact the ECB comes to the rescue and is able to do what they say they're going to do in terms of saving these countries and keeping the union together, I actually think we'll also see the European Union rebound and start to move ahead, albeit it may not be at the pace it's been, the pace that we're all used to. I think there's going to be a new normal, and I think that's true here in the States too. There's going to be this new normal. So quite honestly, I think if they fall off the edge, I think it's a whole different ballgame, right? So you're going to have to take that by one day at a time. But again, I'm not that pessimistic about it. I actually think that I think we're going to see the global economy kind of rally back next year.
Minutes from the Federal Reserve's last meeting suggested the central bank might take further action to stimulate the economy, but after some of the mixed data released this week, it's unclear if that will actually happen. The Federal Reserve's next meeting will take place September 12th and 13th. I'm Jessica Minton for IB Times TV, reporting from the New York Stock Exchange.